Investors could be looking at a potential $1.25 trillion opportunity. Here are 3 ways to profit from the digital transformation of society. Digital Realty. With a yield of about 5.2%, Digital Realty owns, acquires, develops, and operates data centers, which will be beneficial for the stock. Sophie. The company is making it easier for millions of people to manage their money in one app. FinTech ETF. Diversification among top financial tech stocks at a low cost. Let's dive in. Here are the 3 growth stocks that are benefiting from the digital transformation trend. Welcome to Timely Investment Research. With the rampant digital transformation of society, investors could be looking at $1.25 trillion in additional market capitalization across all Fortune 500 companies, according to Markets and Markets Deloitte. All as millions of companies integrate newer digital technologies into corporate operations and rethink ways to provide further consumer value. Banks, for example, are fast-tracking digital transformation efforts to meet the demand for far more efficient, personalized financial services. In fact, here are some of the top growth stocks to consider as the story explodes. Plus, according to a Broadridge report, a majority of financial services firms now view digital transformation as essential to their business and are doubling down on their financial commitments as they anticipate further wide-scale adoption of the new and more powerful tech. According to the survey, firms now spend 27% of their overall budget on digital transformation, a 16 percentage point increase versus the same 2021 study. That being said, investors may want to consider these growth stocks that are benefiting from the digital transformation trend. Number 1. Digital Realty. Let's start out with growth stocks like Digital Realty. With a yield of about 5.2%, the Digital Realty Real Estate Investment Trust owns, acquires, and operates data centers, all of which will be beneficial for the stock. As organizations go digital, they'll need the data centers that DLR provides. Plus, according to CEO Andy Power, the REIT may now be on the precipice of the next wave of demand that will drive our sector for the next decade. Plus, as businesses transform their infrastructure, their needs will grow along with their data center requirements. In addition, as internet-based products become further integrated into people's lives, data centers are quickly becoming powerhouse opportunities. Number 2. SoFi, or take a look at growth stocks like Sophie. SoFi is a digital financial services company that's making it easier for users to manage their money in one app. On top of that, analysts love the stock. Mizuho Securities, for example, reiterated its buy recommendation on Sophie with a $9 target. The firm's analysts were encouraged by the company's capability for real-time monitoring of deposits, in addition to its declining competition. Piper Sandler points out that SoFi is also less likely to suffer from the financial contagion that hit Silicon Valley Bank. Far better, the company recently blew earnings out of the water. Sophie said during its fourth quarter 2022 earnings call it expects to be profitable on a generally accepted accounting principles basis by the fourth quarter. In its most recent quarter, Sophie's fourth quarter loss narrowed to $40 million, or 5 cents a share. Analysts were only looking for a 9-cent loss. Adjusted earnings before interest, taxes, depreciation, and amortization came in at $70 million, which was ahead of the $5 million adjusted earnings before interest, taxes, depreciation, and amortization year over year. Plus, as also noted by Mizuho, the big beat on revenue and adjusted earnings before interest, taxes, depreciation, and amortization are major positives of the fourth quarter results. The promise to deliver positive generally accepted accounting principles net income in fourth quarter 2023 should be well received. As generally accepted accounting principles, losses have been a key deterrent in 2022 for fintech investors. Number 3. FinTech ETF. Or look at an ETF such as the FinTech ETF. With an expense ratio of 0.68%, the ETF invests in companies on the leading edge of the emerging financial technology sector. This includes industries that are currently transforming like insurance, investing, fundraising, and mobile and digital solutions. Some of FinTech ETF top holdings include PayPal, Fiserv, Block, Global Payments, and Coinbase, to name a few. Plus, we have to consider that according to Global X, in 2020, the number of online banking consumers was nearing 1.9 billion, and by 2024, that could be up to 2.5 billion. All thanks to the digital transformation of society. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.